Alrighty, what is good? I hope everybody is doing well. This is going to be kind of like I would say, kind of overview of more so kind of everything I look at in terms of GB model and stuff like that. So in this video, we're going to be covering high probability versus low probability setups. Second, we're going to be, going over my favorite confluences to see in alignment with these specific levels. We're going to go over 0.41 and 0.295 opportunities. So those are the two, what we call target levels. There are obviously, like I saw if you watched the T-Trades video, there's opportunities to engage with those levels, not just specifically the 7475 and the other two. And then we're going to go over double tap, if I engage with an area, if it's already been tapped and mitigated once, kind of the little nuances with that. We're going to go over a little bit of stop management. I'm not too sure how I feel about that. I do kind of want to talk about a little specific thing that you'll see in terms of an easy way to get out maybe early if you aren't wanting to have your stop all the way at the high or the low for the respected range that we're anchoring off of for those GB levels. But I don't want to get too detailed into it because I do think risk management and how you operate and manage trades is different from person to person. There's going to be all these kind of unique factors that a person is able to, withstand in terms of their total risk. And then also I want to talk about inverted GB. So obviously there's going to be kind of a couple little sequences that we're going to go over in this video. And hopefully this clears up most of the questions that I get asked pretty much every single day. Because obviously, like I said, in that video, there was really kind of only so much I could talk about. And I just really wanted to kind of scratch the surface. And the people that are willing to put in the time specifically are going to benefit from that, right? I'll be the first to say, right? If you complain about me not having the numbers on my fibs, you're just being lazy because I literally say every single time what level I'm talking about at that specific point. But that's besides the point, right? Obviously, it takes work and takes you to back test to be able to get comfortable with this. I'm not just going to hand you everything on a silver platter. That's not how you learn. The way to learn is getting this information as a baseline and then you seeing it with your own eyes, right? Obviously, I can give all the nuances and every single little detail that I look at, but if you don't put in the work yourself, you're not going to see any beneficial or any kind of sort of gain from this without putting in your own time and your own work on the charts, back testing it live, et cetera, et cetera. So with that being established, we're going to go ahead and jump into this video, kind of just go down that line of the various things we're going to be covering and then go from there. So yeah. Alrighty, so this is going to be the first example we're going to kind of talk about in regards to high probability setups. What I like to personally see, the first thing I'll say is I like to have numerous things lined up. If I don't have numerous things lined up, I do not really want to execute on it. To me, that's giving low probable signatures. If it's just a plain, GB level, just without anything, and there's no quality structure in that area, that's not something I'm going to want to engage in. This is how I maintain a high win rate specifically, is I'm patient enough to wait for those quality confluences that align specifically and go hand in hand with each other. At the end of the day, our goal is to stack probabilities on our side. That's going to allow us to execute. That's going to allow us to give really, really accurate entries. And over the long run, your win rate is going to be very, very happy with that if you are patient enough for that. So first things first, real quick, what I want to hop into right here, just basic structure. What are we looking at right over here? Well, we have a high up here. We have a low. We have a high. We put in a new low right down here. We put in a high here, okay? This high right up here is responsible for this low over here. So now when we flip this right here, when we close up above this previous high, why this specific high? Well, if we look at this total structure, let me close this really quick. If we look at this structure, this was the last validated swing, right? So the reason I'm saying that is if we look at this right here, okay? If we measure this zone right here, let me delete this so you can actually see the wicks and stuff. We'll dive into this really quick right here. So this zone right here, mitigated. This right here, internal structure. So when we come up and mitigate this, any kind of internal structure until we reach this low is kind of negligatory to me, right? I'm not focusing on it right here. So what we see right here, okay? New low established. We come up, we mitigate this swing. Why this swing? Well, this low was responsible for this high up here. So now when we establish a new low, what does that give us right here, right? If we measure this low up to this high, and we drag this over, what is that a new zone, a new swing, right? So once we mitigate this zone, we come up and we tap the 50% right here. We come down to zone low. What is that now? Mitigated. So when we see this, right, all this internal structure is just being built right here. So when we see a body close above this previous protected high, what does that signify to us? Well, there's been a shift in trend, and now I can look for buys off of this flip, right? So what can we do? We can measure this high over down to this low. Remember, this high was responsible for this low over here. Once we close up above that high, this gives us a new validated area to look for what? Longs, okay? So we can simply do what? Mark out the 50%, which this is actually the Asia trade I took last night. This is that really, really quality trade. Got a really, really good move in Asia. You can see how minimal drawdown it was, and that's why, because there's multiple confluences lined up here, right? So if we look at this, now, obviously, I do want to say this too. If you're a beginner, I don't know if I'm the best to learn from. I talk fast. That's not something I could really control. I do use quite a bit of terminology that may go over your head, but I'm trying to kind of tear it down to the simplest part, right? So if we look at this right here, okay, we have this internal structure that's all building right here. Here's the number one signature right here that I like to see inside of these swings, right? And before I kind of dive deep into that, I will say this. Most of the times I'm taking a GB long or a short, it needs to be in pair with a proper swing, right? That's going to keep you aligned with market structure. That's going to allow you to not get caught up in the wrong side of the market. That's going to help you have a high win rate. So when you add those together, right, we have a beautiful zone here. Now, this may be kind of go over a little people's heads, but this last down move right here on an intermediate structure level is responsible for what? It's responsible for this close back above this previous protected high. So this is going to be a very, very key sensitive area for us to look at and kind of anchor off of in terms of maybe some fib levels or something of that sort. So there's two things you can do here, right? You can obviously play the super safe bet if you're wanting to do, just the total range GB. Obviously, that doesn't get met. Why? Well, if we look over here at this S&D structure, remember, this is responsible for this close up above here on an intermediate structure level. What can we do, right? We already know, and if you have enough screen time with these, you'll recognize these little nuances and these specific moves in price prior to those closes. They're very, very sensitive, and they're going to be very, very beneficial for you to use and utilize and pair with whatever setup you're taking. So if we anchor off of this low up to this high, what do we notice? Well, let's look at this. Let's zoom in over here. Where's our 7475? This blue line right here, what is it perfectly aligned with? The 50% of that swing. If you think that's random, it is not. So that's two things stacked. We have a beautiful and already as is very accurate fib level to utilize. Now, in pair with that, utilizing clean market structure, what do we also have in this area? A 50% of a very, very quality zone. Why is it a quality zone? Well, if we look over here, it's already a relatively big range zone. But the key factor is all of this volume in here. That means there are a lot of orders that went on here. Okay, I don't want to really ever engage in a one-sided zone. What do I mean by that? A one-sided zone is where we come down, we form a low, and we just get consecutive green candles to the top side. That's usually not one of the better signatures to see. Why? It's one-sided. There's really no area to come back for those resting orders to catapult price in the direction you want. So you want to see a lot of volume in these swings and or zones to pair with GB stuff, right? So like I said, what do we have? Bunch of volume. We have a GB off of this S&DR structure. We have a beautiful zone, a lot of volume, multiple confluences lined up with us. Look at this reaction, right? Right over here. Boom, comes down, wicks. You're placing yourself within the wicks, which is a huge thing. What does it do? Catapults off. See what I'm talking about? It's just like when you add those specific little nuances in, those are going to be what's beneficial for you to be able to recognize. And it's going to build really, really, really good conviction on your end. And there's going to be times where you continue to just execute flawlessly just because you've built that confidence waiting for those good quality setups to engage in, right? So now we're going to go over a low probable setup, something I usually like to avoid if I see this specific signature, and we will hop over to that. Alrighty, so now we're going to go over a relatively low probable trade, and I'm telling you, if you literally just pay attention to this specific signature, you're going to avoid quite a few losses, and just overall your understanding is going to, rise more, and you're going to be able to recognize these specific things and avoid them when they present, right? So first things first, a lot of people are viewing this as what, right? We have a close up above, so this was a valid swing. This high established what? This low over here. So now this could be a valid swing that we want to engage in, blah, 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 right? That's not the point I'm trying to make here. So what do we see? Close up above. We see a close below. What is everybody and their mom trying to do here? Short this market, okay? Why? Well, we had a close above, we had a close below. It's a market structure shift. But what they failed to recognize is what? Higher time frame. If we go up to the 15-minute chart, what do we see? What do we see? Well, we have this imbalance here, right? If we want to get more detailed, I really just kind of want to nail on imbalances right here. But let's just highlight this. Let's just highlight this. This is a fractal. Usually, I'll leave this as a little nugget. Usually, if you have two imbalances like this, see this imbalance up here, this imbalance up here, focus on the fractal in the middle. That's going to be better for you. It's going to be a lot better for you. But we'll just label it as that. Let's just pretend, right? So what's the function of imbalances? To put in a new high, right? Obviously, if you have higher time frame imbalances that you're trading into, that we've already came back and mitigated, your stop is weak, right? The function of that imbalance is to do what? Establish a new high. So when we recognize that specific scenario and situation, what can we do? We can stay on side or off sides, right? I think I'm saying that right. Stay on the sidelines. We'll say that. Stay on the sidelines and not engage with it. What do we notice with that? We come down, we tap that imbalance. Had we have been too, sucked into the lower time frame charts, what would we have done here? Well, we would have been cooked. It's just those simple little things that you need to keep an eye on, and it's gonna allow you to just execute so much better, right? Obviously, like I said, I would say intraday, probably my favorite things to look at is going to be the 15-minute chart. Could be the hourly chart if we have crazy volatility. But for the most part, my bellwether, like high time frame chart is going to be the 15-minute. So kind of in pair with that, obviously you can see this looks good. Like I'm telling you, like if there was not a direct imbalance there and maybe the imbalance was lower, would I have shorted this? More than likely, right? But, and the reason I'm saying that is because the signatures, you see a lot of volume. It's not too one-sided. You see good quality S&D structure right here. But what you fail to recognize is what the high time frame is telling you. And that's where a lot of people get caught up in, right? I always say your execution chart is called the execution chart for a reason. You can, like I can do analysis on the 1-minute chart without even thinking about it, right? I can obviously know there's going to be an imbalance here. But for the most part, for most people, your execution chart is called an execution chart for a reason. You're not doing your high time frame analysis there. Don't get sucked up in that. Focus on what your high time frame is telling you and align yourself with that. It's a simple process, but so many people overlook it. So this is a really, really good one. I'm glad this one popped up just now, but I do want to go over kind of a couple more examples in terms of lower probable setups, kind of like one-sided areas, and then we'll jump into some more examples. Okay, so this is going to be the next example we're going to go over that I'm going to label low probability, because this is another one of those ones that does happen quite often, and something that I would recommend, spending some time with, getting your eyes used to it, because you're going to get fooled a couple times, but once you see it, you won't be able to not see it. So what I'm referring to is trading or anchoring off of structure that is right above an unmitigated area. What do I mean by that? Well, what do we have right here? Let's go ahead and get the path tool out. We have this high, we have this low, we have this high, we have this low, we have this high, right? So from a structure perspective, what are we looking at? Well, we establish a new high. This should be the protected low. We establish once we closed up and established this high, right? Once we had that shift above this high, we could deem this as a protected low down here. But what a lot of people fail to recognize is usually this occurs when they're stacked like this, and it's something you need to pay attention to. When you have stacked zones like this and the bottom one is left unmitigated, it's relatively important to be anchoring off of this total structure rather than this low right here up to this high. Why? A lot of times, this low is going to be used as a liquidity point for price to come out and sweep people, uninformed people, you know, kind of wanting to get up in the more premium area of price. So if we measure this right up here, right, from this low to this high, you can see obviously this gets cooked. Well, if we come into it with the mindset of we know that more than likely price is going to want to gravitate down to this area, sweep this low out here before getting that continuation, what can we do? We can avoid that after we've recognized the specific signature, and we can anchor off of what? This total range right over here. And look at this. Look what price does. Boom, sweeps this low. We get a short shift. We're trapping people early, right? We close below, close up above. Give them a little fun, liquidate them. This was NFP, believe it or not. So obviously, you know, NFP respects GB levels a lot. Basically every news driver respects GB levels all the time. Not financial advice. But what do we see right here, right? What does price do? We run this low. We come down, we come to this unmitigated area. What do we notice right here? A little bit of pocket of structure. Okay, boom. We come down, we tap this, and what do? We catapult off. So this is a specific signature that you'll see a lot. Like I said in the beginning of this little clip, is when you have stacked zones like this, focus on the discount one. Shift your focus away from the premium one. Maybe, at most, I would say de-risk a lot, right? Especially in Q. You know, the asset that you can get a little bit more away with that is on ES because it doesn't liquidate and manipulate as much. But NQ, you don't want to be playing those games, right? So something specific to look at too. So now we're going to get into some of the other things that I talked about at the beginning of this video. Kind of go into a little bit more nuance-based things. That way y'all can, you know, write them down and use them for back testing this weekend. All right, so the next thing we're going to be talking about is 0.295 and 0.41 examples, you know, kind of how you can engage with the move. And this is kind of it was a really, really good example today that I actually presented. I believe it was like right before it was around 5 a.m. Obviously, I'm still snoozing. I'm not going to be up for that. But it's a really, really good example of what you want to see for the most part, right? So you can see we have this range low over here. We have this range high over here. If we zoom in right over here, obviously you can see price is doing what, right? Recently, we have done what? We had shifted below this low over here that establishes failure swing high, right? We came down and put in this low. So what can we recognize right here, okay? First, what do we have on our side? Proper structure. We are clearly moving lower. We are establishing new lows. Now, what do we see aligned with what? This is our 0.41. Obviously, like I said in T's video, if you're wanting to trade back into Yeet, you're better off waiting for that 0.41 to be closed below with displacement before engaging in price, right? So obviously you can see we had obviously cleared the 295 up here, closed below. We respected that and started to shift lower as we had big displacement up there. But more importantly, what everybody's, and for the most part, most people's focus should be on, because playing the 295 is a little bit more nuanced based, and a lot of things have to be kind of be interchanging, and I don't think that's a really good thing to go over right now. But 0.41, right? We have our shift. More importantly, what do we have right here? We have good quality S&D structure. We kind of have an S&D inside of an S&D, which is pretty cool. But what do we have right here? Our S&D structure, okay? So we have that in alignment. We have structure in alignment. What else do we have? Well, this line right here at 19,843 is what? The high time frame 0.41. Where could we look to get a limit short? Either you could have your stop up here, or your stop up here, right? You could get a limit short there. What can we be targeting? Well, yeet. Ooh, it's crazy, isn't it? Now, if you wanted to wait for some extra confirmation, what can we do? What can we do? What can we do? Well, let's look at this. This right up here. So I'm going to say this because some people had questions about CSSs. A CSS is simply the last break of structure candle in a formation of a high, right? So we have this green candle right here. What is it? We close above that previous candle right there. Once we get this close below right here, that's my CSS. So what can we do? We can get a 30, 50, 70 on it. Actually, let's just do plain 50 because it's perfect. Plain 50, I'm just measuring the total range of this candle up to this high right up here. What can we do? Well, we can do this, and this is the GB model, or not the GB model, the dream entry, right? We're waiting for what? Once we get to 30% mitigation, what are we waiting for? The candle that trades out of it. Where can we take our sell stop? Below that candle. Where can we have our stop? And like I said, this is just a more confirmation base. Okay, we can have that. Boom, boom. Wow, it's just crazy, isn't it? It's crazy how it goes hand in hand, isn't it? Pretty cool stuff. So we're gonna do one more example of like a 2 or a 4-1, kind of a on maybe on a lower time frame, and go from that. But I'll go ahead and shift over to the next example, and we'll go through that. Okay, this is going to be the last example we're gonna do over the 4-1. This is actually a really good example because this is going to be a lot easier for people to resonate with, in my opinion, without like specific candles you're looking for. Because this is just more like structural based, right? So obviously for this example, what am I measuring? I'm measuring this high down to this low down here. This gives us our 295, our 4-1, our 705, our 7475, and our 79, right? So if we zoom in, what do we notice? Well, we come up, we keep wicking off of, we get a body close above the 295. This is why I say it's in your best interest to just focus on that 4-1 if you're wanting to trade back into the range, because you can get a little bit, kind of, it gets a little bit tougher down there because you are at such a discount part or a discount area of the range. So it's better waiting for that 0.41. But you can see we come up here, we wick that 0.41 after getting body close above the 295. Take this as a pre-sign that this could be the low we're establishing. That's a good way to do it, right? So kind of use that in confluence and anticipate some sort of move back into the range is going to be happening soon, okay? So what do we see price do? Well, we get this initial close. Note what happens here. What is this? Lack of what? Displacement. One tiny imbalance created really at all in this total range. However, if we're waiting for what? Proper structure, a zone to form, what do we notice? Well, this high gets established up here. We close above this high. What does this indicate? Strong low, right? We come up, we can measure the 50%, boom, we get our 50% there. The cool thing about this, okay, so I'll redraw that zone here in a moment. What do we notice? What's in alignment with this, right? We have our GB levels down here, right? This is our 705 and our what? 50%. So this leads me into the next thing, and I actually need to look at my notebook because I don't remember what it is. Anytime I would move a limit from 7.9, from 7.475 to 7.9. But here's a good example. Here's a really good example of when I would maybe move my limit up to the 705, somewhere around there. So let's delete this for now. Let's just draw. Let's just drag this over. I just don't want too much stuff on my chart. I don't want y'all to get confused, right? So obviously for this example, I will plop these up because there's a lot going on here. We'll do right. Okay. So if we look at this, okay, what do we notice? Well, we have our validated structure, okay? When the 50% of that zone, it already as is, that's going to be a sensitive area. When the 50% of the zone is relatively higher than yeet, or GB, apologies, I call it yeet. When it's higher than GB, right, that's when you can maybe shift your focus on maybe taking a limit at 705. Why do I say that? Specifically with this one, what do we notice? We have our 50% right up here at 707.75, but more importantly, what do we have right here? We have this low established where? Right up above that 705. So in this instance, we know one thing. Our 50% is already a little bit higher. It's not a perfect alignment, okay? So we can look to take an entry at 705. We've already swept that low right there. We could basically go into this thinking, I'm fine with eating that extra drawdown, but I don't want to miss this move. This is a perfect example of that, right? So shifting to that, because I don't want to have to, I'm glad I'm on this topic now. Shifting to that, okay? Let's pretend that this high was a lot higher, right? Let's pretend that this high was a lot higher. I'm going to have to zoom way out. Let's get this alignment. Golly. One little bit more. One little bit more. Okay. So from the original question, it was when I would move my limit from 7.475 to 7.9. Right? Usually in the instance when we have a crazy high, swing or something like that, or just a big price movement, a lot of expansion, and we left behind a really clean, unmitigated zone, swing, same thing, right? If we have our 7.475 significantly higher than the 50% of that swing, I'm going to be looking to engage more so at that discount one. Why? Well, I know with high likelihood the market's going to do what? It's going to want to reach for that 50%, and I want to be aligning myself as close as I can with these GB levels if they're near them, right? So with that noted, we can understand that we should, and to face the least amount of drawdown, it would be in our best interest to do what? Place our limit at the 7.9. So that's kind of, both those two examples is kind of a better representation of when I would move off of the 7.475 to just get a more accurate entry. And those are kind of like the little more nuance-based things. I like to usually see one of my favorite signatures to see, and this is one of the best things. Let me get this drawn all the way back down, right up to this high, right up here. One of the best things to see is some sort of low resting right about the GB levels. So we can see right over here we have that low like I was talking about prior. Usually those are going to give you the best reactions in terms of those. But yeah, those are kind of like when I would shift my limit from area to area, stuff of that nature, right? So now we're going to go ahead and get into some of the other questions that I want to cover. That way we can get all these answered and get this video wrapped up. So I will catch you in a moment. Okay, so the next thing we're going to get into is stop management. I know not everybody is going to want to have a stop, all the way up at these highs. Some people like to risk a lot of contracts. I don't know, but there is something specific you can look for, and I would say it's more kind of codependent on the size of the range, but this is like a really, really good rule of thumb to utilize. And if you're familiar with how people trade IFEGs, they wait for a body close back below if it's a bullish one to get out of the trade. It's kind of the same thought process here, right? So when we look at this right over here, let's go down to the 1 minute chart. This GB right here, obviously I could be nitpicky about this and say we expected a deep mitigation because most of the volume's up here. This is a one-sided move, but that's besides the point. I'm just trying to kind of nail on something you could look at on a higher time frame chart and when you should maybe get out of the trade. So measuring this total range, we get our GB levels plotted. We have our 705 right here, our 7475 at the blue line, and our 79 up above, okay? So the main thing you can really put your eyes on and your focus on is what? Well, on the 1 minute, and I'm going to talk about this here in a moment, inverted GB, right? On the 1 minute, what do? Right? We close up above it. Usually that's not a really good signature to see. You don't want to see those areas closed above. So what I'm about to lead into is don't focus on the 1 minute close up above, rather focus on the what? The 5 minute close above. If we have a 5 minute close above, that's when more than likely we're going to respect this area. We're going to come back, trade into it. It's going to be, and the market's going to utilize those levels on an inverted scale and do what? Go to the high. So looking at this, right, if you're antsy about a trade or something, right, and you see this 1 minute close above, there's no reason to freak out and get out of the trade. Wait for the 5 minute, wait to see what that tells you. And you can see right here, this is a perfect example. What does the 5 minute never do? We never get a body close up above it. We keep sucking down right over here, body close, body close, body close, body close. What does this end up doing? Delivering fully, right? So something important to kind of look at and kind of recognize. And that's really all I want to get into in terms of, like stop management and stuff like that. Because like I said in the beginning of the video, it's really, really dependent on the trader, how they operate, their mindset. That's not really a one size fits all kind of deal. This is honestly the best thing I can give you in terms of if you're wanting to, cut some risk a little bit. Because God, like just say forbid, like right up here, if we get a body close, so you're taking a limit here, and you originally have your stop up here, right? And we get a 5 minute body close, maybe like right up here at 797.50 on the 5 minute, right? And you close out of your position, right? You are automatically just cut your risk like massively, right? So that's something specific you can look at and utilize in regards to these levels. Obviously, I would say maybe like if you're on the 1 minute, if you have a 1 minute range, utilize a 5 minute for that confirmation. If you're on like the 30-second, utilize. I don't want to get too detailed into that because some people may take that the wrong way, but you get the point in this specifically, what I'm referring to. So now we're going to go over the last couple things before this video is wrapped up, and I'll get you in a moment. Alrighty, so this is going to be inverted GB, something you can utilize. sometimes the easiest way to say this, if you have a higher time frame, GB levels plotted, it could be relatively important to leave those on your chart in the instance we violate them. When we violate them, those levels will be used as inverted levels, and the market will refer to them time after time after time after time, right? So this specific example, we're having strong displacement here, strong continuation, not something we would really want to try and fade. But more specifically, what do we notice, right? We get this violation right up here. We come up, we close up above. And what does the market do, right? We're creating imbalances even after closing up above the 7.9. What does the market do? We come back, we refer back to the 7.9. Usually this is the sensitive level in regards to inverted GB. Most of the time it's going to be that 7.9, right? So utilize that and focus on that. So what do we see price do? We come back, we refer to it, and we trade up into those highs. Okay. Obviously, you could use kind of whatever risk management, wherever you want to have your stop. That's going to come down to you and your back testing and what you're comfortable with, right? But here's the cool thing, right? If we zoom out right over here, after price did what? We came up, traded all the way up here, created a big old zone. What does price do on a more premium scale up in this range? Well, what does it do? It comes back and refers to where? That 7.9. We come back and we sweep this initial first tap of that inverted GB, and we displace away, creating and generating a nice quality move. Like there's plenty of points in this. If you're souping that low, that's a good 60 points right there to capitalize on and make money off of, right? So that's basically the gist of inverted GB. I would say don't trade that yet. You definitely need to get more screen time with it, but do keep those plotted on your chart, because they're going to be important if we have a higher time frame one and we close up above it and violate it, to utilize those maybe as like a short-term bias that you're wanting to use. That way you can kind of onside yourself with the market and kind of in an easier way. I think it would be of logic to do. But I think that's going to wrap up the video for today. I really just wanted to get this out, before the weekend really kicked off, so you all have something to back test and what I look for specifically in regards to, GB levels, how I execute on them. Like I said, I like to have a lot of confluences lined up. That's how I maintain a high win rate. I think I'm sitting at about like a 85 or 86% win rate for the month so far. And I would say this is definitely one of the hardest months that I've personally seen. But then again, if you block out the noise from what a lot of people are putting out, and just focus on, yourself, a simple process like this. This is just market structure and fibs. It was kind of funny because there was a dude that commented on that video and said that this is just way overcomplicated, but it's literally two things: market structure and fibs. It's about as simple as you can get. There's no inverted Enigma 69 420 gigaboom. I don't even know what else. You don't need that. I'm more like, if you use this, you're going to be more accurate than about 90% of your trades, or the traders you're surrounded with or you see in the space. That's just the part of it, right? And I mean, I'm not like tooting on my own horn, but that's the truth. It's the reality. When you have a good process, you understand market structure, and you have really high quality fib levels, that's just naturally going to happen. And it just comes down with screen time and really rounding out your skills specifically. But with that being said, I hope y'all have a blessed weekend. More videos will be coming out very soon. I really just need to get some more ideas plotted down. And if y'all have like specific things you want me to cover in like the next video per se, feel free to comment that down below, and I will get that formed and try and record it as quick as possible. One thing before we go. This just popped in my head. A lot of times, how to anticipate range. I'm glad I was looking at this. If you're in a high time frame GB level, and you have a 4.1 and a 295, that's where you're going to see a lot of chop happen. You'll see it if you back test it. And it's an easy way to anticipate it and maybe stay out of the market. What do we notice price does here, right? We climb up into this range, consolidate, finally get out of the range, come back, refer to it, come back up here. What do we know and what do we see right over here? This is about New York AM, right? Usually in most cases, you're going to see it in New York AM when we are in between the 4.1 and the 295 is where you're going to anticipate a lot of chop to happen. Here's the key thing. Focus on those extreme areas to engage in price. What could we do? Short? down to where? The next level. What can we do? We can long, back up to the next level. What can we do? Well, let's drag this over. We can short, back down to either the next level, or you can trail your stop or whatever. I'll leave that as is. I'll leave that as is. But you'll have a blessed weekend, and I will catch you on the next video. And I will talk to you later. Peace.